Welcome back. Now here in Nigeria, the three tiers of government have begun full disclosure of their financial transactions to enhance transparency and accountability in public finance. The process is known as the International Public Sector Accounting Standards. The Minister of Finance, Mrs. Kemi Adeosun, explains that this will increase disclosure in accounting reports and provide the executive and legislature the basis for their decisions on allocating resources and improve credibility and compliance with international best practices. Now, global markets, including commodities, have been on tenterhooks for weeks ahead of Brexit referendum. Oil prices edged higher today, shrugging off a smaller than expected draw on U.S. crude stocks on the last sweep of opinion polls showing Britain's favor to remain in the European Union. Our research analyst from financial derivatives company, Amaka Ajibu, joins me now to bring all of these into perspective. Good afternoon, Amaka. Good to have you in the studio.
Thank you for having me.
Now, the fate of the Brexit is being decided today. How could a potential breakup of the EU, mean for the oil market?
Okay, so right now, the Britons are in the voting polls trying to decide their fate in the EU, and investors are also watching to see the outcomes of this EU referendum votes. So, is a very risky asset. So investors, following the exit of England from the EU, investors are not so confident in leaving long positions in oil. So this would encourage them from keeping long positions in the oil markets. So in the long run, oil prices would see kind of a downward trend due to speculator or investor confidence going down. And also in terms of the dollar-pound parity, as you said earlier on, Britons are shifting their currency investments towards the dollar because of the uncertainty that is attributed to the euro and the pound. So this would mean that the dollar strengthens, and also it will also mean an increase in the price of oil. So that would lead to increase in the cost of oil, and that would lead to a depression in the demand, which in turn will feed into the depression in the oil prices.
Now, that's a scenario where perhaps the UK decide to leave.
Yes.
Now, what if it's the other way around? What happens?
The markets will revert back to current positions, because what we need to understand is that if Britain leaves the EU, prices will be governed by risk aversion and not the basic fundamentals in the markets. So prices would go on as they have been, but there will still be sentiment towards the future of the UK and the EU relationship. Some speculators or some investors in the markets will still have their aversions to their reservations,
because they are still not yet sure.
Yes.
Perhaps they will still come up with the issue of referendum.
We
want to break off,
yes,
and
exactly,
all of that.
So.
All right. Now let's look at the impact of this Brexit to the energy sector.
Yes.
In the EU. What are the possible impact?
Yes. Okay. So as at last March, I think of last year, yes, the EU embarked on this energy union policy in order to maintain energy security, sustainable energy, and general liberalization of the energy sector within the EU. And the UK was at the forefront of this policy. So you can imagine their main advocates are leaving them. So that would impose like a damper on current progress that they have made. However, I don't think they would completely let go of the progress they've made, so they would bounce back up. But the time at which they would bounce back up would depend on, how they are able to quickly assimilate new policies and new constitutions.
All right. Now let's look at generally the oil market. What's the outlook like? We're talking about Brexit. we're talking about Fed here,
Yes.
talking about interest rate. Are they going to raise it this July or not? So what's the outlook going to be for the oil market?
Janet Yellen has always come across as someone who is more concerned with the global outlook. So right now, Britain leaving the EU will cause a bit of chaos in the global financial markets. So increasing interest rates will mean further pressure on the on prices of oil and other commodities denominated in dollars. So I feel like they would hold back on interest rate hike, which would then put less pressure on the increase on the appreciation of the dollar, and hence put less pressure on the decline of the oil prices.
All right, let me do my little poll here now with you. What do you think this referendum will tilt towards? The EU stay in or out, or rather the UK in or out?
We would find out by the coming days. So.
All right, thank you very much for your time, Amaka. Thank you. Well, that was Amaka Ajibu, research analyst with Financial Derivatives Company. Now, South Africa's rand extended gains against the dollar in early trade today as cautious optimism that British voters would opt to stay in the European Union and the session helped risk appetite. The currency is trading at its strongest levels against the dollar since May 3. Focus was on the British referendum, with latest opinion polls before voting began favoring Britain remaining in the EU, buoying appetite for riskier but high-yielding assets globally. But a wait-and-see mood was expected to prevail through the rest of the day, dotted by bouts of volatility, as markets nervously awaited the poll results. Our business people in Bangui, Central African Republic, are struggling to settle into some kind of normalcy so they can support their families. Insecurity has persisted in the month since President Faustin Archange Touadéra was sworn in March after winning an election intended to draw a line under intercommunal and interreligious violence that involved the mainly Muslim Seleka and began in 2013.
After years of violent turmoil in Central Africa, the election of a new president last December marked what many hoped is a step towards the restoration of stability and economic recovery. Central African Republic, one of the world's most unstable countries, suffered the worst crisis in its history in early 2013 when mainly Muslim Seleka fighters toppled President Francois Bozize. Despite the country's showing of economic growth of 4.9% last year, the biggest growth since 2000, entrepreneurs and small business owners in the capital say they're struggling to stay afloat.
Business depends on the economic situation of the country. If there is insecurity, then we have low turnout of clients. And then business picks up again when the situation is calm. But we have a loyal customer base.
We're struggling to make sales because we have no customers. We used to get a lot of customers, but things are really tough right now. It's also hard for us to access supplies. The people who bring us merchandise don't often bring it, and when they do, they sell it to us at high prices.
When we return after the break, we will look at today's trading at the forex and fixed income markets. Do stay with us.